Morning, guys. Welcome back. How we doing? Happy Wednesday. Happy CPI day. Morning, guys. Alrighty. Dogecoin. Yeah, that Dogecoin has been moving. I've been sort of watching it. That's the only thing I own in my Robinhood account is a singular Dogecoin. One single Dogecoin. One. My Robinhood portfolio is up 322% year to date. Let's see if it'll focus. Come on now. That's my whole portfolio. 38 cents, baby. One Doge. Love it. Big money. I totally forgot I even had it, and then I checked it, and I was like, oh shit, I got it. Dogecoin millionaire. When Lambo. Could be a little juicer to get involved in. Maybe. Shiba also. Shiba Inu. Yeah, it's not why I'm here, though. Welcome back, everyone. Hope you guys are having a good day. Hope you had a good day yesterday. Yesterday, not a bad day for me. Just pretty much just gave back some Tesla profits, but really just a drop in the bucket. Still held above some very nice levels, and today gap up off that level. But there's something that I'm slightly concerned about on Tesla today. I'll talk about it. There is something that's potentially resemblant of the previous pullback that I'm starting to see, and I want to make sure to be aware of that. Possibly some more profit taking today. We'll have to see what the reaction is here, maybe post CPI and then intraday. Could start to see a little bit of weakness. Could start to see a little bit of a slide, right? We have talked about this in great detail over the last few days. We've talked about the big push, yesterday and Monday. Just sort of a lack of movement, a lack of moving higher, and after the market is up, about 6% in pretty much a week, it's probably time to see some cool down, right? So that's pretty much what you've been doing, just a little bit of cool down, very expected, very common. CPI today probably either gives us that larger pullback or shoots us straight higher, right? I don't know exactly what will happen, but maybe the CPI downside will be the exact cool off that we want to see. But there is no surprises here if the market continues to slide. We are straight up. This can slide lower. We're very elevated over the 20 SMA. There should be full expectations of the market staying relatively sideways. Consolidation, right? Consolidation after a big move. These are all things that are very expected, and what I've been doing basically is just decreasing my size, right? So when very aggressive on the push higher, we've clearly gone into some type of a consolidation stage here. And if the market wants to stay relatively sideways, lower those position sizes, understand what it's doing, be in tune with the market move right now. The main squeeze is over on the overall market. It's time to cool off. It's time to relax. It's time to make sure to realize some profits and just see what the next move is. So that's the stage we're in right now. It's the calm stage, maybe the calm before the next storm. And yeah, it's not time to be going crazy as the market trades relatively sideways. Not yet. So we'll have to see what the reaction is on CPI today. All right. Press that like button, subscribe to the channel. Thank you, everyone that went ahead and bought something from TraderTees.co. Those are sold out, so that giveaway is over. We're going to start sending out those hoodies, get the winner of the giveaway. Yeah, and we will continue to do that, right? Pretty much all the merch sales from this point forward are going to come with some type of giveaway from me. So that was pretty successful. Seems like you guys liked it. Hopefully you enjoy the hoodies, and hopefully one of you that come to the live stream win a lifetime membership. So we'll see. We'll run that probably within the next week or two. Still got the giveaway going for YouTube. If you subscribe to the channel, if we hit 100,000 subs by the end of the year, we're giving away $10,700. Probably not going to get there, but subscribe. Every subscribe adds $1 to the giveaway. All right. That's that. Let's just jump right into it. We're going to skip the WAP wheel today because we got to jump right into it. We got CPI. We got some important stuff. Here we go. All right. Here we go. Charts. Let's go here. Today, CPI 830. This is big, right? Very big, very important. CPI 830. Be aware of that. Yeah, I mean, I think we should all be very aware of that. I'm not going to say much more. Some Fed president speaking after that intraday. Tomorrow, PPI unemployment claims. Powell speaking tomorrow, it looks like, at 3 o'clock. I did miss that yesterday. Powell speaking at 3 o'clock tomorrow. So, interesting there. Friday, retail sales, and that is it. Okay? All right. That's that. Earnings yesterday, Spotify and Kava. Spotify, big move, big push. What a stock, right? I mean, I use Spotify every day, and what a stock this is, and what a miss, I mean, for my long-term portfolio. Sort of wish I had some Spotify shares, man. Damn. Spotify sick, and Kava juicy as well, man. Juicy as well. So, Kava, Spot, big moves on earnings, all-time highs. Congrats to the shareholders. Today, what do we have on the earnings side today? Earnings side today, not much. Looks like Cisco, not too much today. Walt Disney tomorrow. Let me go ahead and pull it up for us. What is Bitcoin Depot? What is that? What is Bitcoin Depot? I've never heard of that. NU, Cisco, Disney tomorrow, JD, Advanced Auto Parts, ASTS, Applied Materials. So a few left. Alibaba on Friday. All right. That's that. Let's jump into the charts. Let's get some charting done before the CPI. Okay. Nasdaq. $15-minute chart. So, very clear. 21,250. This has been a level we've had on our charts for pretty much 3 days now. We have talked about this failure point for multiple days, and we can see it is still failing. All right, so this is very important, and this could really just be that level that just keeps the Nasdaq slightly lower and keeps it sort of, fading slightly lower, trying to find where that next pullback long opportunity is. That's my expectation as of now. CPI could change that, right? CPI could just shoot us straight up. If markets like CPI results, this could just sort of get going again. But for now, my expectation is, hey, don't expose yourself too aggressively to longs here. Make sure you are you're generally de-risking longs into this supply high. This is a major high. This is a very important high. This is a must-break level now. But for now, sellers definitely are, keeping that brick wall intact at that 21,250 previous all-time high on the Nasdaq futures. So that's very important. You got to understand that if you're going out and just bloating the boat on longs, it could work for you, right? We could get that next squeeze, but I would say, hey, why not wait for a little bit more of a pullback? Why not wait for a little bit better risk reward here? I don't know if I love the just, crazy exposed longs right into 21,250 yet. So that is very important. You got to pay attention to that. To the downside, it looks like 21,100 has sort of stepped up. This is a little bit of an adjustment for me on the levels today. Looks like 21,100, 21,100, and then pre-market today, 21,100 on the Nasdaq futures has been somewhat of a key short-term level, so we can keep that on our charts. Nothing that I would be that interested in longing, because you're longing right back into this supply high, which is really not that interesting, but it's something you can sort of keep eyes on and watch how the market reacts off of. The key level, the next level that I'd probably want us to come down to before I get interested in any kind of larger term, more major longs, is 21,000 on the Nasdaq futures and possibly that 20,890. I think further pullbacks are better at this point for better risk reward. If I run a Fibonacci from the lows to the highs, we can sort of get an idea of what percentage point retracement this would be. You could call that 20,890 like a 38.2. 50% retracement is down at the 20,700 level, and that's down near this 20 SMA. So if we do get a 50% retracement, still a fantastic watch, right, for the next long. So you got to understand at this point, guys, deep pullbacks, and these could go deep, are still just percentage point retracements from this major move. And there's going to be a spot where, those buyers step back in and this curls back higher. But you just don't want to be long here and have to sit through this whole thing and hope and pray that something comes in. I'd rather de-risk up here, let this come down, and find that next spot. That's my read right now. Now, the reason I'm thinking like that is because, man, would I love to be wrong. Right? Man, would I love to be wrong. Would I love this to squeeze straight up, right? And that's fine. I would love that. So I would prefer to sort of prepare for the pullback and be wrong. That's how I want to set up my mindset here, right? I want to play that mind game, right? Sometimes you got to play those mind games for yourself. You can't just say, oh my God, I'm so long here. This market's going straight up. And then when it goes down, you get all stressed out and worried. I'd prefer to play the, hey, if it goes straight up, great. So be it, but I'm going to look for the pullback. So I'm expecting these pullbacks, 20,700, 800, 890, 20 SMA still down here, 21,000 is another spot. There's a lot of levels below, right? There's a lot of levels below that I want to be watching. No, I'm not going to trade puts in this market. I'm not. Sorry, right? I know people say play it both ways. I'm not interested in that, to be honest. In this market, I am not interested in trading puts. I don't want to be on that side of the market. I'd prefer not to be on the, 1 day red day, guessing which day that is out of I would say 80% of this is green days, right? You have like probably 70% green days, maybe 30% red days. I'm really not interested in trying to guess when that 30% comes in. I would prefer just to sit my ass back, go to the gym, go eat some lunch. I don't need to do that. That's my mindset. That's not the correct mindset to some, right? Don't think that is the way I'm trading does not mean that you have to trade that way. Okay. That's not necessary, right? But we all have our own strategies. We all have our own ways of trading. That's the glory of trading the markets. You could do it however you want. You don't have to abide by some kind of, you have to do this to be successful. No, you don't, right? But what I'd rather do is just really zone in on the trend, zone in on one direction, and find those spots where that market then regains strength, right? Because I know that's going to be a much more lucrative opportunity. I would prefer not to the last thing I want to do here in this market is try to short the market, and then end up this thing going straight back up. And then I'm short, losing money on a short when I should be focusing on that long-term trend. That is the last thing I want to do. If I find myself in a short and this market squeezes straight back up and I'm stuck taking losses on downside because I'm trying to short a larger term uptrend, that is the last thing that I personally want to do. That doesn't mean you have to do that, but that is my opinion, okay? So I'm not saying that you can't short this market, but that is just my personal read and how I plan to play this. So 21,250, 21,100, 21,000. That's a big spot that I'm waiting for. Let's see and let's reassess this after the CPI today. QQQ. Let's pay attention to a few levels here. Number 1 is 510 and number 2 is 512. 510 stepped up yesterday. 512 is a key level here. This whole 2-point range is an interesting area of support. However, I think the best long continues to be 505. I still believe the best long is right here. All right, so this is really what I'm waiting for. I'm waiting for this pullback to 505. I don't want to play this pullback because I know the markets can do this, right? I would not be surprised at all if the markets do this, right? So I'm not really interested in shorting it into 505. I don't want to get stuck shorting a move that squeezes straight back up and the market stays irrational, and I don't want to be part of that squeeze, right? I don't want to be taken out of the market if we squeeze like that. Do I think that's possible still? Yes. You have seen the market's irrational upside squeezes. You have seen how aggressive it has been to the upside. Is it possible for us to squeeze again? Absolutely, it's possible. So I'm not interested in that. And there's a lot of shorts that are probably not interested in that, and that's probably why you're going to have a tough time moving lower, because there's probably some fear of shorting this market right now, right? It's going to take a lot of balls to short this upside right now. I would say the short comes in under 510 into 505. This would really be the short that I think you could start to see some sellers get interested in, right? This is the short that I'd say you start to see the selling pressure come back in aggressively. Under this low from yesterday into 505, I'd say that starts to get pretty slippery, right? So this is possibly where those sellers get to rejoice a little bit, where they can start, getting that downside pressure. That would be something you could look for. Personally, I'd look for that. Before that, I think it's going to be tough to short into this 510, this 512 area. These look to be some pretty decent holds over the last week, right? But if you do break under that 510, then I'd say 505 is a possible slippery area. Why do I say that? Well, it's because this was straight up, guys, right? This is a gap up and straight up. Right here, guys, is a gap up, okay? So if you do fail under 510, this definitely gets slippery. And so if you are out there shorting, and guys, I am not biased in this market. I have not become successful trading by being completely biased. You have to understand both sides, okay? You can follow a trend and stay bullish in an uptrending market, which I want to be, but you also need to know where on the intraday things can flip and where you need to understand that, sellers are going to come back in. And so I do believe that under 510, you are going to get sellers coming back in. There is a straight up move here from last Thursday, and there is a gap up here from Wednesday into Thursday, right? And so this area is definitely not somewhere that you're going to have a lot of support, and this could get pretty ugly quickly, right? But that would bring us back into the 505, which I think, again, is the best long opportunity, 505. Look at this daily chart on the Qs, guys. This is not going to be an area that really provides much support here on the market, right? Look at this gap right here between 510 and 505. That's going to be aggressive, right? That drop's going to be quick, no doubt, okay? So watch that area. If you do start to navigate under 510, you better be aware of that. That is not somewhere to just say, we're going to bounce. No, we're probably not going to bounce, okay? We're probably going to go straight down to 505. And then the previous all-time high would be sort of my spot to see if that holds. So keep an eye on that area. Maybe we get that on CPI today, right? If CPI is weak, if markets don't like CPI, we could see this sort of straight back down, right? Back into that 505. So let's see. S&P 500. ES. What a level at 59.85 yesterday. This was a level that we talked about on this live stream, and what a level that was yesterday. You can still see some of that resiliency to hold on those pullback levels, right? Right here. 59.85, 59.85. Look at that 59.85 yesterday. What a beautiful level. What a beautiful bounce back higher. Now, there is a problem here, right? And there is some weakness here that you should be paying attention to for now, right? For now, we can see that 59.85, yes, it is holding, which is a very key spot, 59.85, 59.85. That's a big spot. That's a nice support. However, take a look at this. 6,010 starting to reject, right? Starting to reject. This is concerning for now. You have to watch what this 6,010 level does. If we stay under this 6,010, this is a lower high, guys. And this is the start of a short-term downtrend, okay? This is the start of a short-term downtrend. If we see that 6,010 level, right, start to reject, this is the start of a short-term downtrend. And this could be the downside that we need for this market to cool off a little bit, right? So very clear, right? Pay attention to the levels. Pay attention to what the market's doing. For now, I would be a little bit concerned today if we are rejecting 6,010. There's no doubt. The bulls should be worried about that. You should be paying attention to that. You can see the failure that's coming in. So watch that 6,010. Watch the 59.85. Under 59.85 is that same type of gap level that I was talking about on the QQQ, right? Under 59.85, under this low from yesterday, you have a gap up and a go from Wednesday to Thursday of last week. Under 59.85, I think you go straight to 59.50, right? This could be the short that you look for right here. Under yesterday's lows, down into 50, that could be a very nice short. There is nothing but a gap here on the spot, on the ES, and on the SPY, of course. So that's a nice level to watch today, guys. It's very clear. If you just take away all the biases, take away all the ego, take away all the you know what's going to happen, I don't care what anyone says, if you get that out of your stupid mind, right, and your thick brain, you can just play these levels very nice, right? So if you stay under 6,010, that stays weak. If you break under 59.85, that's going to get very aggressive to the downside. That would get aggressive, in my opinion, down to 59.50. If you hold 59.85 and you reclaim 6,010, then you're going to see upside again, right? If you reclaim the 6,010 today, you're going to see that upside again towards that 6,040, okay? Very clear levels here on the ES. This is a very good time to trade the S&P 500. Look at how clean these levels are. They are perfectly being respected. Perfectly. And so this is a great time to trade the market, but you got to trade the market based off levels. You got to trade it based off levels. You can't trade it off of some type of bias here. If you just trade it based off these levels, you will do very well. Look at how clean they are. Look at how the market is respecting. So watch 6,010, watch 59.85. Let's see what happens on this CPI. SPY, same thing, right? Same exact thing on the SPY. Look at the SPY here. Previous highs right here, 596.70, very clear highs. Look at how it's failing now, right? Look at how it's failing now. That's important. So we are failing under these previous highs. This is Thursday's highs. This is Friday pre-market highs. We have now turned that into a rejection point in the pre-market today. That is an important takeaway for your trading day. You need to see if that stays above or gets above or stays below. That's very important to judge your trades today, right? If we're below this level, you need to know that you're not going to long the market today. I don't care what Tesla looks like. I don't care what Meta looks like. I don't care what Apple looks like. I don't give a shit what anything looks like. If you are under this level, you are not longing the market, right? That's very clear. If you get back above this level and you turn this back into support, it's the same thing. I am not shorting the market if we are holding above this level now. All right, so trade with these levels, trade with them, on the intraday. If we do see downside off this level, then you need to know that we're going to come down into the 594 demand. That's this low from yesterday. That's these lows from last Thursday. That's the level that could hold if we do get a little bit of a pullback, 594. If we break 594, then you have a gap, right? Pretty much, you could call it 592, but honestly, that gap comes down to 590, right? It's possibly 592. You'll probably see a little bit of action there, But 590 as well is also probably one of those targets. 590, 592. If you break under 594, that's probably going to be sort of that, floodgates opening for some short action. So watch that 594, watch the 592, the 590, and then look to see whether we reclaim or continue to reject this 596.70 today. That is the same as the S&P 500 futures 6,010. If we do not get back above this level today, that is a very clear rejection. That is a very clear lower high that you need to be paying attention to. Look at it right now, right? That is very important. Something to watch today, okay? All right, let's go to the Dow Jones. I think the Dow Jones also made a key rejection yesterday. Yes, it did. So take a look at this. Look what the Dow Jones did yesterday. This is very important, guys. Pay attention to this. This is what the Dow did yesterday. Look. The Dow Jones turned this previous low back into a high, right? Look at this right here on the Dow. Previous high, right? 44,300. Here's your low, 44,300. Look at what it did yesterday, guys. Perfectly. This does not get any cleaner on the Dow Jones yesterday. Break, retest, rejection, right? Rejecting this previous low, rejecting that previous high. Look at how clean that is on the Dow Jones. That is telling, right? That is something you need to pay attention to. So if the Dow Jones stays under 44,300, then you know that you're starting to find some rejection points up there. Something to know, something to pay attention to. I think you're probably going to move this demand down a little bit to around this 43.8, to be honest, like right in here, right? This 43.8 low, that's probably where you find a little bit of support down here in this general area and this general area here. But for now, right, I think the telling thing to take away on the Dow Jones is 44,300. That is the exact previous high here and low. And look at how it failed yesterday. And look at the trade that sets up off that, man. Look at the trade that sets up off key technical levels. Look at the Dow short that was there for the taking off probably one of the easiest and cleanest levels you could possibly have. So really nice on the Dow there. Who's in my backyard? No, it's the neighbor. Neighbor's in my backyard. All right. IWM. 1 hour chart. You guys can see right here. 235. 239. 244. So very clear highs at 239. Very clear lows at 235. Let's see what the CPI does here. Either shoots us down into the 230, gives us that pullback, or this thing holds the 235 and we get our next long opportunity. Let's wait for CPI to get the next read. SMH, still weak. Still weak on the SMH, guys. It has not found that spark, so this is telling as well. I know who's here also. I'm getting some work done to my patio. Keep walking past this window and freaking me out. So, 247, 100 SMA, and that's it. Let's watch that 247. Let's watch that 100 SMA, and let's wait for these. Let's look for the CPI results here. Here we go. 1 minute. 1 minute for the CPI here, folks. Press that like button if you could. Subscribe to the channel. CPI is in 1 minute. Get a sip of water. Just buy Dogecoin and become a millionaire. That's right. All right. Let's see. 2 seconds. I'm trying to tell if I think this is going to hold. For now, it's okay. Sometimes you get those big wick. This one looks like it might hold. This looks like it might hold. Usually you'll get that sort of wick failure already. Like, I don't think, like, this yeah, this one looks like it's going to hold a little bit. Typically, you'll get that pop and then that quick failure and then that big drop. This looks like it might hold. What's the numbers? Everything in line with expectation. Okay. Tesla. All right. So I am happily wrong, right? If this goes up, I'm happy about that. You know that. I mean, I had about $350,000 in Tesla, so hopefully this stays higher. If not, then I'll have to give back some more profits today, but that's fine. I'm chilling. But yeah, I mean, we still got a lot of Tesla involved here, so hopefully this does hold. I would love to be wrong, right? I would love for this to go irrationally higher again for today. And take some more profits into it. But let's see. Market likes it for now. All right, let's get into some stocks. Guys, what did I tell you? I mean, really? Is that what we're doing here? Is that what we're going to guess on CPI and then we're going to try to tell someone we told you so after CPI happens? Is that really what we're doing? We need to grow past that stage in our lives, okay? If that is still the stage in your trading career, you need to get past that, okay? I'm telling you, that is going to take you nowhere. If you are still in that stage of your trading career where you have to prove someone that you were right, you are still immature, okay? And you are probably not going to make it. All right. I know real traders don't do that. Let me put it that. I know real traders aren't. I'm never going to go to someone and say, I told you so, motherfucker. I told you, right? No, I'm just going to walk away with my $1 million profits and say, good luck. All right. Anyways, 21,250. Still below it. Right? Still below it. That's a problem, guys. So, yes, we did pop. Landscapers are here. While we did pop here, we do need to be careful of the failure still. So just make sure you're paying attention to the 21,250. Okay? Make sure you're paying attention to that today. QQQ. Make sure you're paying attention to that 515. We need to get through those highs. We cannot trust this entirely until we get through those highs. Could this be a bull trap? Absolutely, it could be a bull trap. If we fail today at this 21,250, that is a nasty bull trap, and that could be sort of even the move that creates the downside, right? So, please, it is not in the clear until we break this level. It is very, very clear that is not in the clear until we break that level. Please pay attention to that today. Do not get stuck in that bull trap. Do not chase longs today just because we're up on CPI into this supply. This could be the exact move that creates liquidity and drops us lower into a much needed drop, right? It would not surprise me in the slightest. Okay? You got to be aware. You got to start being able to figure out where these traps come in, where they could potentially trap retail traders. The trap today is upside on CPI, longs right into the exact same supply, because for some reason everyone has forgotten that that's there, and then bam, fade it right into a good pullback. But so many people long here that get stuck long, right? It's very clean. Pay attention to that, please. All right, let's go into some stocks. Tesla. Probably going to look to take some more profits on Tesla today. A good hold here. But there is one thing that I am going to be very, very cautious of here, guys, and that is the beginning of the pre-market pop and afternoon fade stage. Let's call that the PPAF. We have potentially entered the PPAF stage. P-P-A-F. That's the PPAF. That is the pre-market pop afternoon fade stage. I do not want to see that on Tesla. This is the exact stage that we were in during this time. Okay? This time on Tesla was PPAF. I keep making up these idiotic acronyms, man. Right here. This was PPAF. This was pre-market pop, afternoon fade. Pre-market pop, afternoon fade. Pre-market pop, afternoon fade. Same exact thing every day, right? That is not what I want to see on Tesla. That is something you need to be aware of today, okay? If we do not hold this pop today and we see this Tesla fade, that is not good. That is, you need to, I would personally exit. I would personally exit. If you want to maintain profits and you want to lock it up, that would be your sign, right? Do not, if we fade this entire gap up today, no bueno, okay? That is where you start to establish downtrends, okay? That's how you start to establish these downtrending moves where you pop into them, get people excited, fail it, right? And so pay attention to that. That doesn't mean it has to happen. I actually think this looks relatively strong right now, so I am sort of hopeful that this is not happening because you are seeing a pretty valid pop off this level, which is the exact gap fill level, which has been our exact demand level to long off of. So this is looking good, but just really pay attention to it today. Don't get blinded by it. If you really start seeing that fade, make sure you're taking action on that. You're still going to see some rejections at 350. You're still going to see some failures at 350 today, so be aware of that. But I would basically just watch 350 supply. I would watch this 325 level. I think you're probably going to start seeing a pretty silent, choppy $25 range in here, right? I think you could absolutely scalp it. I mean, $25 range on Tesla, that's juice, man. I love that. Tesla's trading in some big ranges. So this is about a $25 range that you can look to trade. If you can get over 350, then great. That would really set up the next move. But for now, I would probably only look to take this into 350, okay? Nvidia. One of the sexiest break and retest on the charts right now, my friends. I mean, this is the break and retest in all its glory for you. Previous all-time highs, I mean, it really doesn't get much prettier than that. That is a break and retest for the ages. That is sick. So, really nice on Nvidia. Congratulations if you long 144. That is a sexy entry. That is trading a system, trading a level, and it looks absolutely fantastic. So, you can see right here, you have that 144 previous all-time high, held beautifully. You got above that 146.50 yesterday, held beautifully. Look at the stair steps that's starting to happen. Look at the foundations, right? Remember the foundations we were talking about? Here's my cement. There's my cement. Love it, right? Here's my new brick. Here was my previous brick, right? We lost this foundation. We fell into the lower brick. Now we're back above that. We're holding the new one, right? Look how clean that is, guys. Take a quick second and look at this, okay? This happens all the time. If you can learn to read the chart like this, you can very, very understandably set up trade ideas. Trade ideas that don't require you to look at the RSI, the MACD, the this, the that, all the bullshit. You know, this is all you need to look at. Look how clean this is. Previous lows turned into new high, right? Previous lows turned into rejections here. That's a break and retest short. That was very nice, right? But then look what happened yesterday. We turned that rejection point and those previous lows and this rejection point back into a support, right? And so that is a very clean structure change here on Nvidia. And now, as long as Nvidia is above this area here, right? As long as Nvidia is above this 146.50, this is a new long spot all day, every day. So be watching this 146.50, of course, that 144, and just be aware of the 150 supply above, right? Be aware of the 150 supply above. If you can get above 150, this thing's going. AMD, a little bit of a pop here. I think you want to get AMD, at least back over 145 here, guys. Right, at least back over 145. But I've told you guys what my plan is here with AMD. I am waiting for 150. There is, in my opinion, no reason not to wait for it. It's a very clear break and retest rejection. This is a break and retest rejection. And so I am not going to long against that strategy, right? And so I'm going to wait for us to break and retest hold the previous rejection point, right? Look how clean that could be. Previous rejection point, previous hold. If I get a break and retest hold, bam, right? Love it. That's what I'd be looking for. So I'm not touching this thing till 150. That's what I'll wait for. Let's see what happens. SMH getting a little pop, right? This could be an interesting day for some of the semiconductors if we do get a pop. So I'll go through some of them. Broadcom, I would watch 173 in that 50 SMA. That could be very interesting. MU, I would watch this 98, 100 area. I'd look to see if we can reclaim 105. And then TSM, I would be watching this 190 again, right? Check out this 190 spot on TSM. This has been a previous high that has held, that is held, that is held, that is now holding. So can TSM maintain this 190 low? Absolutely. Could we get a little pop off it? Absolutely. Watch that 190 low. That's now a triple bottom low. Okay. Let's jump into some individual equities. Microsoft, number one. I think this is quite interesting, actually. Take a look at this right here, guys. Look at this little Microsoft brick that's starting to get built, right? You can see look at the foundation. Here's your foundation, right? We're going to draw out that foundation. We're going to lay those bricks right here, right here, right? Check that out. Look how Microsoft is holding that 416, right? Very nice. 416, 416. So that's pretty nice. Where's the next brick get laid? Right here, 426.50. That's your next level. If you can hold above this 426.50, you're going to 433. Okay, so I would watch this 426.50 very closely today. This is a very interesting opportunity here at the 100 SMA. Keep an eye on that spot. Okay. Meta, interested in Meta still. You guys can see right here, Meta, I think, is just sort of consolidating above this 20 SMA. You can see this sort of consolidation lower. 20 SMA right here. I think longing near this 580 demand is very interesting. I'm long right now, Meta, off this 580. And I am definitely still looking for this to move higher. So let's see. 580. Pay attention to it. Want to talk about Square? I would not forget about Square over 90. I would not forget about Square over 90. Let me just say that. Square owns a shitload of Bitcoin. If this is a sympathy move on Bitcoin and Square gets over 90, there is a lot of juice here. A lot of juice to be squeezed. I am definitely watching Square today over 90. Keep an eye on that. HIMS, another small cap stock that I'd be watching here. HIMS is perfectly breaking and retesting previous all-time highs. This could not be a cleaner potential long entry. Previous all-time highs. Look at the break and retest of that level. This is very interesting. Look at the consolidation above that. I am definitely watching HIMS today. A little bit of small cap action off that previous all-time high. Crowdstrike's gone, guys. This is the trade that got away. Congratulations to those that paid attention to the Crowdstrike analysis for the last month and a half. We talked about this for pretty much the entire month of October. We talked about staying long the entire month of October off this retest of 295-300. And if you did, then congratulations. If you didn't, like me, then you missed it. And so I have to accept that I missed this. This is the miss of the year for me. This was a sick trade. I mean, this could not have been cleaner. Previous highs, lows. Previous highs, lows. Break and retest the entire way higher. Right here, right there, right? Look at how clean this is. It's gone. At this point, you got to wait for a pullback. I say pull back to 324, right? And do this. And then you got to wait to find that next entry. But for now, that's gone. You do not trade you do not take these trades during this phase, guys. You need to change the mindset of your trading. This phase is the payoff phase. This is the payoff. I'm not touching it. If I'm not in it, it's gone. This is the phase that you enter. This is where institutional and smart traders enter these trades, right? Right here. This is where they sell into retail chasers. And so at some point in your trading career, you are going to have to change that. At some point, right? And you'll probably lose until you figure that out. At some point, you're going to have to figure out how to long positions during consolidation above key demand levels, waiting for the payoff stage. Most traders will start trading this during this phase. They may squeak out some profits, right? They may squeak out something on an intraday, which is fine, right? I'll take it, right? That's fine. But that is typically going to result in just, sort of circling and never really finding the clean upside continuation in your trading performance, because that is not risk reward, right? There's no risk reward here. This type of trade provides risk reward, which can actually help you slowly two-step forward, one step back your account. This right here, just chasing this squeeze, is pretty much just the never-ending revolutions of I make some, I lose some, I make some, I lose some, right? And you just never go anywhere. That's how it be. That's how it be. So, Felipe, relax, please, in the chat. I don't know what's going on, man. You all right? All right. Coinbase. Yeah, I would watch the cryptos again today if the market's hot. Coinbase 300, very clear level. Look for that 300 level. 350 is that high. MicroStrategy, gone. I mean, what a long off that 333. It's gone. Let's go to Google. Google 183.50. I'd watch that today. That's a very big level there at 183.50. Keep an eye on that spot. Amazon. Amazon has been hot, man. And look at these stair steps on Amazon. 1, 2, right? If we can get over this 210 here on Amazon and we can do a little bit of this, right? This could be very, very nice. Watch Amazon today over 210. Very interesting spot. 208 and 206 are two long entries I would be watching. Qualcomm, I think Qualcomm's dead, guys. I'm going to be honest with you. I'm not touching Qualcomm. This is a shit show that I took my loss and I'm no longer interested in. Apple, I would pay attention to the potential Apple catch-up. Let's see what happens here. This is big demand down here on Apple, but it really just hasn't moved. But 222.50, 220 area, some big demand down here. Pay attention to what it does. Let's go to Lululemon. Man, I hope Lululemon really pays me off here today. This is a sick trade, and this is one I'm not going to miss, right? I'm not going to let myself miss this. 310 stair step, 295 stair step. This is the stair step like Crowdstrike, and I told myself, you are not missing this trade. I don't care how long you have to hold it. So Lululemon, I ain't missing. This is about as clear as it gets in terms of stair stepping upside, and if we get a squeeze today, I think we're going to get my target at 335. Home Depot, need to get back over that 406 area. Costco, I'd pay attention to this previous all-time high retest. That is a retest of previous all-time highs at that 926 level. Netflix, gone. I mean, we talked about Netflix back here. We said Netflix might be that outperforming long, and if the markets go up on elections, be long Netflix. Well, that worked, huh? It's about almost $80 higher from where we talked about it just about a week ago. So that's gone. Congratulations to anyone that traded Netflix off our recommendations. Toast is a small cap I'm watching today over 40. This is one of my dark horse sort of trades. Watch 40 on Toast. Square's really moving. Pay attention to this thing today. And that's about it, guys. I'm going to go ahead and run out to the Discord and get this day started because this is looking like an exciting day. But 21,250. 21,250. I can already see the excitement in this day, and I can already see the potential trap that could set up. Do not be that person, please. I challenge you to not be that person today. Do not be the person that longs right into supply today because we're up on CPI and you get absolutely demolished. If that is what you do today, then you need to look at yourself And you need to look at yourself in the mirror, and you need to look at the charts, and you need to understand what happened. It is not manipulation. It is not bullshit. It's not because you're a bad trader, right? Well, maybe you are, but you just have to pay attention, right? And actually analyze the charts and actually trade based off the charts. There is no reason to long the market right now, right into this exact high. This is the exact high that they want you to long the market into, where you get absolutely demolished. Don't long into 21,250. If you have swing trades that are up in the pre-market today, look to take some profits if you do not see this break. If this fails, you better be a profit taker on some of those swing trades. 21,250. Watch it. Have a fantastic day. Best of luck out there, my friends. Press that like button for me. 2,800 people here, 1,200 likes, man. We can't even get half of you. Almost half. Press that like button. Subscribe to the channel. No, it's not even half. Jesus. I will see you guys tomorrow. Peace.